Welcome to In Exile. Today is Thursday, October the 25th, and this is the market overview, looking at the Dow SPX VIX TNA UUP, FXE GLD SLV, and actually a couple of those I really haven't been covering. So, all those and scratch a couple. Anyways, away we go with yet another one of those days. Starting off with the Dow. We said last night the daily was starting to look better. The 60-minute was looking a little bit worse. And today, up 26 points on the Dow. Very nice. We've been looking for a bounce since this big red candle. And it's tried. It's tried yesterday. It tried again today. And but at least it was positive. So, what do we have to work with? Well, we have plenty to work with. I do think that we're now at the point where the bounce is going to occur. I've been expecting the bounce for the last couple of days, but today I think really was a. It's right. It seems like it's right at its apex to me, and I'm going to explain. So we have another spinning top. Actually, yesterday was an inverse hammer, but today is a spinning top. We can really see the excessive separation now in the short-term moving averages. We know there's a bubble here. The question is, when do we get our uptick? It could be as early as tomorrow. It could be Monday, all things being fair. We've been talking about this bottoming area forming in the heat map. It certainly is doing that. It looks nice. Beyond that, we now have the CCI curling up. We have the slow stochastic leveling out. We do have the 14-day RSI moving average still pointing down, but we have the RSI leveling out. We barely have a tick down in the MACD histogram. The MACD is still ticking down. I really think that this is just a matter of time it's going to happen, and that's going to be it. Notice the low from today. Where does it go? The low of the big green candle from back here, the bottom of which should be some support. And yeah, it barely pierced it and retreated from it. So even though we have these bottoms of the candles right here, this isn't bad. This isn't bad. It could be better. These should be better, but yeah, there should be something here. Beyond that, we could flash and go to the 200-day moving average, which would line up with the bottom shadows of these candles, but it seems like that would be really, really obvious. So I'm not overly inclined to that, but it looks like we're getting the first little twinges of the turn. So I'll be looking for that, and hopefully tomorrow is the day. Going to the 60-minute time frame, see if there's anything else, anything special, suggesting that things are better. And here we were yesterday, right at the close, right here, and it was looking not great. Close is right here. What do we have now? We still have the bottoming area. And now we have everything moving up together. That's nice. That is bullish. Not that it has sealed the deal and now it's going to break out, etc., etc. But yes, we do have really good alignment in everything. So a short-term bounce at the least. Yeah, it looks probable. And as long as we don't flush at the open tomorrow. But yeah, it looks probable. And would this be enough to change the daily time frame? Yes, I think that it would be. And that would most likely set off a chain of events of short covering. And where would we go? I think that the most likely point at this stage would be the halfway mark of this big red candle, which, if it's a big enough jump, would coincide with the descending lower trend line of the channel that we had previously been watching, so that makes sense. I don't know that tomorrow will be a huge update, but yeah, it would be that would be nice. That would be 200 points. I'm sorry, 100 points to the upside from where we are at this moment. Is that doable? Yeah, actually it'd be a tiny bit more than 100 points. But anyways, I digress, and I will move on. On to SPX. Anything different here? Well, yes, there is some difference here. We do have a spinning top just like the Dow. We have the short-term moving averages just like the Dow, showing a bubble. It went down to the major price consensus level of the month of September, and that is where it bounced. Good. We have minor bottoming area in the heat map. We have more things looking like they want to turn. We have the RSI attempting to turn. We have the CCI attempting to turn. We have the slow stochastic attempting to turn. And we have even less tick down on the MACD histogram. So, is this poised for everything else to turn? It seems like a good spot to me. Much better than the last 2 days. So just being early the last 2 days. And we don't have far to go at all before we could close above or pierce the lower descending channel that we had been looking at. So a break above that, massively positive. That would coincide with a break of the halfway point of this big red candle, which in itself would be positive. You'd still have a potential issue here at 1334. Actually, it's 1333.74, but regardless, I think the odds are good. I think the odds are good. And since the daily is slightly different, is the 60-minute better, worse, etc.? Nope, we have everything climbing together. So, things look good for the 60-minute time frame, and not bad, not bad. So daily good, 60-minute good. I think, I mean, we could have a little bit of a flush because of Apple and Amazon, but those really fought their way back up to zero or almost zero in the after hours. So bad news. We certainly have priced a lot of it in, and now that it is out of the way, maybe now we'll be free to catch a bid. That's the theory anyway. And going on to the VIX. Ooh, look at this. This is, in my opinion, a really good tell. I mean, for one, you have a fat body spinning top. You're able to maintain above the 200-day moving average. Not bad signs. You've gotten out of a lot of the topping area in the heat map, so you do have some good signs. However, we now really see the excessive separation. There is a bubble here, and it should lead to a break of the 200-day moving average to the bottom. In addition to that, you have a new pivot high, and you know, for the bears, they would have to come down, make a new pivot low that's higher than all these other ones to maintain the pattern and then go back up. So at the very least, we should have downward movement to correct the bubble and to make a higher low. And if we fail to make a higher low, then we know that the bears are done. But that's a little ways away. Beyond that, we are equal on the MACD histogram. No tick up. MACD itself going up, CCI going sideways, stochastic is attempting to turn, CCI is definitely turning, and the 14-day RSI moving average is still holding up. The majority saying that it's about time for the turn. But much better if we had a downtick on the MACD histogram and a really clear downtick on the stochastics. Don't have that yet, but Are the odds good that that will happen tomorrow or Monday? Yes. So, daily, not great on the VIX. And actually, you know what? I'm going to take a look at the 60-minute too, because it would be nice to see if there's anything that correlates with that thesis. On one hand, you could say, oh, we've come up, we're consolidating for another move up. Well, that could be. But you have the 14-day RSI moving average moving down, you have the stochastics moving down, you have the CCI moving down, the RSI moving down, the MACD moving down, and the MACD histogram is choppy. So, 60-minute time frame for the VIX. Does it have enough to push the daily into where we would like it to go? Yes, this looks definitely bearish. So, excellent. Excellent. Just checking something really fast. I want to see if the no, the real body did not close above the shadow from back here. Well, it's piercing. Okay, so moving on to TNA, small caps. And last night, we were talking about getting back into the channel, which is a really good sign. Staying above the 200-day moving average, also a good sign. This is 3 days in a row that it is pierced, but it has been able to stay in the channel today after getting back inside of it, well, the last 2 days really. So that is a really good sign. Beyond that, we are not far away from an uptick. Not that that would do too much. I mean, that's only going to take it up to 59, but $2 from where it is now, yeah, that would have a positive impact on the market if we get that uptick tomorrow. Beyond that, we have everything moving up, with the exception of the 14-day RSI moving average. We are fading a bottoming area in the heat map, and we still have the positive divergence in the MACD histogram, that which takes us to in between $58.50 and $60. So, do we have reason to believe that this should go up? Yes. It'd be better if we had an uptick that may be coming tomorrow or Monday. And we still have positive divergence also in the stochastics, both of them, and in the CCI, and not in the RSI. Not bad. Not bad. Going on to USO oil. We've seen the bottoming area in the heat map. We knew that we were outside the lower Bollinger Band. We got back inside of it today clearly. We can now see that there is a bubble in the short-term moving averages. Of course, we don't have an uptick yet. We have another hammer, possible bottoming or reversal candle. And it's right into where it stopped today. Major price consensus level from July. So, good spot. Beyond that, it's a little more mixed. Stochastics and 14-day RSI moving average holding low. CCI going up, RSI going up first day. Barely down on the MACD histogram and down on the MACD. But this looks pretty darn good. This looks pretty darn good. So we just need an uptick, and then we'll have a target somewhere in the range of $33. So excellent. And if oil goes up, the market should go up. UUP, the dollar. Yeah, we've been watching this one really close also. Check this out. This is so interesting. We've talked about this line right here. Talked about it getting pierced, getting tested over and over and over and over again. And where does it stop today? Right at that line. It did pierce it again, and once again getting pushed back, and now it's right at the line. Fascinating. You know, we know that this is a wedge. We know this is a wedge. It'd be nice if it broke out to the upside, but I mean, it doesn't have to do it just yet. We have plenty of room right here. And if it wants to go down and retest the ascending line, I'm totally cool with that. That would be just enough room for the market to rally, hit some targets to the upside, and then we can see at the moment of whether it bounces or whether it breaks as to the further direction of the market. So while I would prefer this not to break it tomorrow, we have plenty of things that would suggest that it's ready to turn. We have, let's see, what all do we have? We have, well, technically we have some negative divergence in the MACD histogram. It is questionable and mild, so I wouldn't read too much into that at all. But you have the fast stochastic trying to turn. You have the CCI turning. And everything else is pointing up. So, I mean, this is questionable. And its positioning definitely makes it questionable. But it certainly does not have a absolutely clear indication that it is set to, fly higher. So, questionable. Going on to CompQ, the NASDAQ. Alright. Well, almost hit the 200-day moving average today. Backed away from it slightly. Inside bar today, which is not bearish. We do see the excessive separation. It isn't extreme, but it is there. We still have a bottoming area in the heat map. We have the CCI rising. We have a first day uptick on the RSI. We have a first day uptick on the MACD histogram. 14-day RSI moving average still holding low. Stochastic still holding low. And the MACD 14-day RSI moving average, stochastics, and the MACD still pointing down or holding low. But we're showing some indication that, and it's at a really good spot to be caught, that the turn could be right around the corner. So I would think Friday or Monday. That is my guess. Going on to Apple. Yeah. This one got beat up. Released earnings. The earnings I didn't think were bad. iPhone 5 or iPhone sales seemed to be pretty darn good to me. But it made a new recent low today. It is not a reversal candle. We do have a bottoming area in the heat map still. It dipped really low in the after hours. Matter of fact, it went, I think it was like 586 or something. And where does that take it? It takes it right to the 200-day moving average. And it bounced from there. In the after hours now, it is, I think it's dead even. It might even be a few cents positive. So it went all the way down here, and it went all the way back, just like a yo-yo. If we were to include that as a shadow for this candle, which we are not, but if we were, that would be a massive hammer. So pretty cool. Beyond that, MACD histogram, positive divergence, RSI going up, stochastics trying to turn, but it's a mess. 14-day RSI moving average holding low, CCI ticking down. Excuse me. So this one is it ready for a bounce? I sure would like if it was, and it certainly is a possibility at this moment. And I don't know that its tail did anything really today, except for getting, look at that, I didn't even notice that before. Bottom of the tail touches the major price consensus level from August. Interesting. Hey, why not? 60-minute time frame Apple. And we have a little blip in the heat map for bottoming area. We have the stochastics rising. We have the CCI rising, RSI rising, The MACD histogram barely rising. MACD histogram, MACD itself pointing down. 14-day RSI moving average pointing down, but it is really minor. So 60-minute actually doesn't tell me much of anything. So I guess I'll just have to rely on the daily at the moment. Going on to GE, trying to get a better read on the Dow. And what do we have? We have a close that's completely equal to yesterday's close. So no change. We can see the excessive separation in the short-term moving averages. We have something that more resembles a hammer, but it's not quite a hammer. We have a bottoming area in the heat map. We have barely a tick down on the MACD histogram. Normally that happens right before it gets an uptick. Most things still pointing down. CCI pointing up. Tomorrow's going to be really important. This doesn't tell me as much as I would like it to do. That's unfortunate. JP Morgan, most important bank. This one's interesting too. We have we have a big heap of red nothing. That doesn't tell us nothing. And we have the CCI rising. We have the actually you can't see it right here because it's covered. We have an uptick on the fast stochastic. We have an uptick on the RSI. And everything else is still holding low or pointing down. So a little bit mixed, but it looks like it is in a position where a turn is close. Not as much development as I would like, so it's not going to tell me as much as I would like to see. Bummer. Yep, I can't really confirm or deny too much based on GE tonight. That's too bad. Or JP Morgan, sorry. GE didn't tell us that much either. XLF, financials as a whole. Maybe this will tell us something. Well, this tells us exactly the same thing as JP Morgan, except we don't have an uptick on the fast stochastic. So actually this one tells us even less, but it is getting really good support on the long-term moving average bar, and there's nothing to see here. Alright, GLD. Oh, I'm glad I pulled this one up. Some nights I do and some nights I don't. I just don't find it that interesting. Wow. We have an uptick today. That is good for the bulls. Uptick gives us a target of barely above 168. We have the CCI rising. We have the RSI rising. We have a first day uptick on the MACD histogram. We can see the MACD itself is losing momentum. We can see the stochastics are going sideways, and the 14-day RSI moving average is still pointing down. This one looks really prime for a bounce. Excellent. That is good for the bulls. Is there anything else I can cover tonight? Nope, I think that's about it. Why not? Dow Jones Transports. I haven't looked at this one in a while. Oh, how interesting. Not quite to the halfway mark on the big red candle. Caught before the major price consensus level for the current month. Nothing in the heat map anymore. 14-day RSI moving average is rising. Fast stochastic is going sideways. RSI is going sideways. And yeah, everything else is pointing down. But not bad. Not bad. Still maintaining a higher low. Wow, if that stochastic turns, the sucker is going to go up. And a march to join the 14-day RSI moving average after a secondary reset should be pretty darn strong. So I don't know if this bearish cross will be able to complete on the MACD itself, but if it's rejected, oh, This could be pretty darn good. Alright, that's going to be it for tonight. As tomorrow's going to be very interesting. So Friday or Monday should see a turn. I'm hoping that we see a turn. Hopefully we won't see it flush at the open tomorrow thanks to Apple and Amazon. But I think that would have happened in the after hours if it was actually terrible and horrible. So, as always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you very much.